So we'll continue the discussion. So we were doing 700 and 705, forming an opinion on the independent, on the financial statements and reporting as per the report, and 705 is modification. Now while we are discussing 700, we had so many points which we listed out as a form and content of the audit report, out of which we almost completed, like basis for opinion, all those things, not almost completed actually. I think we completed signature, place, date, right? So sign, place, date is already done. UDN is also already done. So other information nothing to discuss because it is 720, which is not there for syllabus as 720. Now we will be discussing the key audit matter and emphasis of matter and other matter paragraph. Did we discuss management responsibility and auditor's responsibility? Right? Then this also done. Okay. Going concern, key audit matter, emphasis and other legal regulatory requirements are pending. So what is key audit matter? Key audit matter, see, first you should understand the difference between key audit matter and emphasis of matter. See, key audit matter is governed by 701, SS 701, it is governed by SS 706, emphasis as well as other matter paragraph. What is key audit matter is talking about? Key audit matter is something, while doing the audit, auditor felt in his judgment very important, some matters very important, and those matters he communicated to TCWG. Among those matters he communicated to TCWG, he selected a few matters and given it as key audit matters in the independent auditor's report. Sir, then what is the emphasis of matter paragraph? Emphasis of matter paragraph is also, while auditor is doing the audit, he felt whatever the items, he was going through the items audit evidence while collecting audit evidence, he felt those items are important to understand, important for the understanding of the financial statements from the user's angle, not from his angle. Sir, I did not get the difference. See, while I consider I am an auditor, while I was doing the audit, I felt matter number 1, 2, 3 very important for my professional judgment. Based on those matters, I am giving my judgment. That means I am putting under key audit matter. Emphasis of matter means those matters I always continuously keep on seeing, but I felt these things are important for you people. You should know it because you are not experts in knowing the financial statement. That is why I am putting under emphasis of matter paragraph. Key audit matter is as per auditor's point of view. Emphasis of matter is from user's point of view. So now we will discuss key audit matter and emphasis of matter paragraph. So key audit matters, communicating key audit matters in the independent auditor's report. Again I am repeating, try to remember, not try, you have to remember standard name as well as standard numbers from which it is dealing. Now first of all we should discuss what is key audit matter. Key audit matter means those matters that in the auditor's professional judgment were most significant in the audit of financial statements of the current period, because auditor is doing the audit of only current period, not the previous period or next period, and these matters are selected from the matters communicated with the TCWG only. That means there are some matters, those actually selected from, communicated from TCWG. Out of those things he selected few. Those are called as key audit matter. He has put it in a separate paragraph in the audit report section called as key audit matter. And what is the purpose of putting that key audit matter? It is not like to give the report on those things. He felt it is important. While you are taking some decisions on the company to invest, not to invest, you better read these things because it might have some impact on the future or maybe financial portion of the future things. For example, if I take an example of there is a litigation which is pending. We don't know the court order is not, because court order has not yet come. We don't know we will win the case or lose the case. But it is important as of now. As of now, I can't conclude that we will win or we will lose. But it is an important matter. Please have a look into it. Keep on observing this matter. Based on this, you try to take the decision. So it is included in a key audit matter to enhance the communicative value of the auditor's report by providing greater transparency about the audit that was performed. See, whatever I have performed, whatever the important things which I felt as important for my understanding professional judgment, as a transparent matter, I am disclosing it to you in an audit report by way of key audit matter. Please have a look into them. And it is key audit matters, KAM, are additional information. See, whatever you are required to give as per audit report, opinion, basis or opinion, you continuously give that. It is an additional information to the intended users of the FS to assist them in understanding those matters in the auditor's professional judgment were very, very important of the audit of current period. That is why you should be knowing. Few things are like areas of significant management judgment in the audited financial statements. See, while taking the judgment of the life of the asset, management actually took one very, very significant management judgment that instead of 20 they went for 40 years. They have the reason also, I am convinced that. But for your understanding, I felt it is important. Please have a look into it. I am not telling just because I am trying to put it as a key audit matter, it is wrong. I am trying to tell that I am satisfied. You just have a look into it. Next year also keep on seeing that. Sir, what is the objective? Again, the same objective only. Objective of the auditor are to determine key audit matters and having formed opinion on the FS, communicate those matters describing them in an auditor's report. Sir, how do you decide which are the key audit matters? See, anything it is up to the judgment of auditor, but some things they tell that if there are some areas which are having higher risk of material misstatement. Sir, what is risk of material misstatement? Actually, we will discuss in SA 315. There is something called as inherent risk and control risk. Combined together, we call it as risk of material misstatement. If you feel those things are very, very high as per 315, then try to put it under key audit matter. Sir, what is IR and CR? We will discuss in 315. Or there are some matters which are based on significant management judgment. It is not based on some evidence, it is just an judgment, it is an opinion of the management. Or those things which are having effects of audit on the significant events or transactions that occurred during the period. These things determines whether to be communicated as key audit matter or not. You auditor will decide based on these things. Higher risk of material misstatement, this can be asked for 3 marks. How do auditors select the key audit matters? Depending on the areas of higher risk of material misstatement, or if it is involving so much of significant management judgment, or there is an effect on the audit of the significant events or transactions. Based on that, he will try to put it those matters under key audit matter. So communicating key audit matter is okay, not so important. Okay, this is also again an important point. 3 or 4 marks question they can ask. Just because auditor puts the matters under key audit matter, it is not a substitute for disclosure in the financial statements, etc. Sir, etc. means what? Etc. means even audit report also. Not audit report actually. Either these are financial statements or related statements. Related statements. Sir, what is this? See, just because as a company, sir, company is telling the auditor, sir, anyway you understood and you are putting it as key audit matter in the audit report, why should I disclose in my financial statements? Like, it's okay, anyway you are disclosing. No, you can't tell that. It is not a substitute. You have to give entire information to the users in the financial statements. Out of those items, auditor will select some very, very important items and put it under his key audit matter. So it is the duty of the company to disclose as per FS, and it is a duty of the auditor to select few things if he felt important and put it under key audit matter. And they also tell that just because he communicates under key audit matter, it is not, there are 3 things, mainly 3 things. It is not a substitute for disclosure, in financial statements as per AFRF. That has to be compulsorily disclosed. It is from management angle, management point of view. So disclosure part is from management. They have to disclose. Just because I tell in my key audit matter, it does not mean that you are not supposed to tell it in your financial statements. You have to disclose it. Second, just because I put a few things under key audit matter, it is not that a substitute for expressing a modified opinion as per 705. Because the moment you see the, as we discussed earlier, materiality and pervasiveness, depending on that, if you require to qualify the opinion, adverse the opinion, disclaim an opinion, go for that. Just because you are focusing as an important point under key audit matter, don't just ignore that. Then third one is 570. It is not a substitute for 570. 570 talks about material uncertainty regarding the events or conditions that may cast significant doubt on entity's ability to go in concern. We will discuss in a short span of time. So it is also not a substitute for disclosing as per material uncertainty in SA 570. It is not a substitute for disclosure in financial statements, not a substitute for disclosure, modifying the opinion as per 705 or 570 material uncertainty relating. Again, just because I put some matters under key audit matter, I am not giving any separate opinion. I am just giving a separate item, that's it, not an opinion, that is. Not a separate opinion on individual matters. My opinion is still on the company itself, not on individual matters. But individual matters are important, have a look into it. And you have to communicate with its WG, that's okay, not so important. This is about 701. 701 is key audit matter. Whenever auditor feels very important from his professional judgment while conducting an audit of the current period, and those matters are selected from the matters communicated with the TCWG, you put it under key audit matter. Once you put it under key audit matter, it is not a substitute for disclosure in FS, not a substitute for 705 modification or 570 going concern, and as well as it is not a separate opinion too. So how I select the items as key audit matter, depending on higher ROMM, significant judgment and significant events which are there. So this is 701. If we discuss 706, if you look at the differentiation between 701 and 706, you will easily identify that it is EOM para and OM para in the independent auditors report, IAR. So what is EOM? They tell that EOM para is a paragraph included in auditor's report that refers to matter appropriately presented or disclosed. Yes, they presented in the FS that in the auditor's judgment is such importance that fundamental to the user's understanding, not for the auditor's understanding. If you look at the wordings of 701, they told that it is most significant in the audit of financial statement. That means I am doing the audit, I am an auditor. For me it is important. 706 is fundamental to the user's understanding of the FS. Then they tell that other matter paragraph. What is other matter paragraph? Auditor want to communicate any information regarding finance related part, money related part, but those item is not there in financial statement. Those elements which are required to be communicated by an auditor but not there in financial statement, he puts under other matter paragraph. You will see an SBI audit report, that is the best example for that. So this is included in AR, refer to the other matter presented or disclosed in FS. In the auditor's judgment is relevant to the user's understanding of the audit, the auditor's responsibility, that's okay. What is the objective of 706? They tell that a matter although appropriately presented or disclosed in the FS, that is of such importance is to the users of fundamental to the user's understanding of the FS, or as appropriate any other matter that is relevant to user's understanding, audit or auditor's responsibility or audit. It simply focuses entirely on users of the financial statements. I feel it is important for them, that is why I am putting under EOM paragraph. So they tell that just because you put some items under EOM paragraph, the auditor would not require to be modify opinion as per 705, because that is just a separate section under audit report is given as some or this highlighting, telling that okay, please have a look into it. And whenever you are telling some matters already under 701 key audit matter, don't repeat those matter again under 706. See, I am not telling your report should not have KAM as well as EOM. It can have both key audit as well as emphasis. But the matter what is already stated in KAM, you can't state the same matter again in EOM paragraph. Sir, how do you state that auditor shall include a separate paragraph, separate section in the name of emphasis of matter paragraph in the audit report, as we listed out the points, there is an emphasis of matter separate paragraph, and you clearly tell that what matters are being emphasized, what are you being highlighting, and you have to tell them that because I am highlighting here, my opinion is not modified because of these things. Auditor's opinion is not modified in respect of matters emphasized. I am just giving the information. That's it. There are some examples they are given. You can go through that. And again, this is also a 3 marks important question. They might ask 706. They tell that even in 701 also we discussed. Just because auditor is telling some matters under 706, it is not a substitute for 705 or 570 or disclosure in the financial statements. Whatever it is required to be disclosed in FS, that has to be compulsorily disclosed without any deviation. What if the auditor feels, depending on the materiality and pervasiveness, you want to modify the opinion? Yes, you can modify as per 705. There is no doubt about it. If the auditor feels the material uncertainty there with respect to going concern, yes, you can include a separate section in the tell that but there is a uncertainty in going concern. But just because you are putting under 706 heading, it does not mean that you should not do all these things. These are not substitutes, they are in complementary. In addition, law is not mandatorily telling that you should include EOM paragraph. But where are there situations with respect to 705, 570 or disclosure that has to be compulsorily there. They are fundamentals that can't be compromised. That is EOM paragraph. Then other matter paragraph comes, where other matter paragraph they tell that auditor considers necessary to communicate a matter other than those that are presented or disclosed in the FS. That means whatever it is there in FS, that is already there given under opinion, basis for opinion, KM, EOM, every paragraph they have given. But other than those FS, but in the auditor's judgment is relevant to the user's understanding of audit, then auditor should include OM paragraph, other matter paragraph, provided that is not prohibited by law or regulation, or it is a matter already stated in 701, again don't state in 706, other matter paragraph. Yes, sir, how do I include it? Again, you include it as separate section as we given it under our discussion. And whatever you are going to put it under other matter paragraph, just communicate with the TCWG. Sir, I felt these are the things which are related to money, finance, but not there in financial statements. Please have a look into it. If you open our SBI report, you will understand other matter paragraph. EOM paragraph, though, anyway, there is nothing great to discuss. Other matter is something important which we have to discuss. So, other matter, SBI auditors. When I say SBI auditors, I am talking about SBI central statutory auditors. We did not audit the financial statements or information of 6,034 branches, including 35 foreign branch, included in the SFS, standard financial statements of the bank, whose financial statements or financial information reflect total assets of 23 lakh crores on 24 March and revenue of 1,77,000 crores and the same year. See, if you see here, they are again highlighting 23 lakh crores, 1,77,000 crores, 6,000 branches, yes, related to money, but all these things are not there in financial statements. In financial statement, they just give that whatever it is given, our branch is having this much, our branch is having this much. These are other branches which is being, what is this? SBI. These are not there under SFS. All these things comes under, what is this? Consolidated financial statements. Under SFS, it is just my thing. That is why it has to be given under here. Again, they are telling our opinion is not modified in respect of the above matter. We are just giving an other matter paragraph. Emphasis of matter para, I think they are not there. They don't have it. So, if you want, we can see some key audit matter, 1 or 2 key audit matter from SBI itself. So, key audit matters are those matters in our professional judgment were of the most significant in our audit of SFS for the year ended 31st March 24. These matters were addressed in the context of our audit of SFS as a whole, and in forming our opinion thereon, we do not provide a separate opinion on this matter. Yes, they have to specifically tell that. It is just my understanding, it is important. And we have determined the matters described below as key audit matters. communicated in our report. Auditor felt it is important. One is, there is some problem with respect to classification of advance and IRAC norms, income recognition and asset classification, and non-performing as advances also. So how the matter was addressed in our audit, he will give the details. Then again, second matter, again valuation of investments and identification of provision NPA, something they have given. I am not reading that. You can have a time, if you have a time you can go and read that. Again, contingent liability, he felt it is important. Again, he earlier only told that he is not issuing any separate opinion, or he is not, we do not provide a separate opinion on these matters. I felt important, you please have a look into it. That's it, nothing else. This is about other matter paragraph, emphasis of matter paragraph, and key audit matter paragraph. Understood? So again, if we come to the original discussion, we left with few things here. I think only one thing, no, two things. One is 570 and other legal regulatory requirements. 570 anyway we will discuss at a later point of time. So first we will discuss other legal regulatory requirement, then we will finish up this audit report part. Then we will go back to 570 at a later. Sir, what is other legal regulatory requirements? See, when the auditor is being appointed, auditor is doing the audit as per standards and auditing, whatever the things which is already there, that is to be conducted as per standards. But Companies Act is telling that this is other legal regulatory requirements is as per Companies Act 2013. Companies Act 2013. So Companies Act 2013 is telling that, see, whatever you do as per standards and auditing, you do it. I don't have any problem. Along with those things, in your report, you should even report on certain items which are given under Companies Act. Sir, what items? Mainly section 143 of Companies Act. 143. Under 143 there are 143.1, 143.3, 143.11 main section and 143.12. So fraud thing, there are many subsections. So they tell that other legal regulatory requirements. The first thing we will see here, it is so if you see, they have given here reporting requirements under the Companies Act 2013. So section as per 143 of Companies Act, they have to report it. So if you see here, there is section 143.1 which we have to discuss. There are 6 points. 143.2 is okay, it can be ignored by you, that is not a point of discussion here. 143.3 is again duty to report part. Then once it is done, we have to discuss 143.11 as well as 143.12. So once we do that, we are done with other legal regulatory requirements. Sir, what is this 143.11? This 143.11 is nothing but the CARO which is given under the below of that 143.12. First we will see what is 143.1. 143.1, see, if you see here, they are telling that these are 143.1 are, these are inquiry related part. Auditor has to inquire the following matters from the management. Sir, what items? He has to inquire 6 items. 2 items related to loans and advances, 2 items related to securities, 1 item is related to book entries, and 1 item is related to personal expenses. So what are those 2 items related to the loans and advances are? First one is, you have to check whether company has given any loans basis on security. Sir, what is that? It is like a secured loan. Company has kept some security by itself and it has given some loan. If that was the case, as an auditor, you have to inquire the management whether those items which are kept as security properly secured in the name of company or not. That has to be checked. As well as whatever the terms and conditions you have agreed, number of years, number of months, percentage of interest, anything, is that prejudicial to the interest of the company or not? Prejudicial means against the interest of the company. Is it for the good of company or is it bad for the company? That one thing you have to inquire with respect to the 143.1. Whether loans and advances made by the company on security basis, is it properly secured or not, and the terms and conditions are prejudicial to the company or not. It has to be inquired. First one, company as well as members. The second related to advances are Are there any loans and advances which are shown as deposits in the company? Actually, loans and advances should be shown as loans and advance. You should not show it as deposits. That is what Companies Act is also telling. I am not telling that they are already shown loans and advances as deposits. I am just telling that as an auditor, please inquire with them. Are there any loans and advances shown as deposits? No, sir. No problem. I am not going to touch it. That is the two things which are related to loans and advances. Then third one comes is security related part. Third and fourth is security. Sir, what is that security? So, company, whenever the issues for some shares for cash basis, as an auditor, you have to ask the company that whether the cash has been actually received or not for the allotment. Once you allot the shares, you should receive the cash. If no cash received, what steps has taken to account it in the books of accounts with the same transaction? Whether the shares are allotted for cash, if yes, whether cash has been actually received or not. If it is not received, how are you dealing it in the books of accounts? That balance sheet is correct and regular and not misleading. This is first point based on securities. Then second point based on securities. See, you are a company other than investment or banking company. That means you are a Reliance company, you are a manufacturing company, some company. So if you are being that type of company, having any shares, maybe securities or debentures, sold at a price less than the purchase price. That means have you sold any shares at a loss? I should ask as an auditor to the company, as a company other than a banking and investment company. See, what is the logic? Because banking and investment company are mainly into that category business only. Buy the shares, sell the shares, buy the shares, sell the shares, trade, futures and options. But normal trading company try to focus on trading. Service company focus on servicing. Not on this nonsense things. So as an auditor, I am asking you, are there any shares which are sold at a less than purchase price? No, sir. No problem. 2 loans and advance, 2 securities. Now fifth one comes. Are there any expenses which are personal in nature, have been charged to revenue account? Revenue means mainly P&L account. P&L. Are there any expenses which are charged to P&L account, personal expenses? No, sir, not charged. Okay. Then last one is, any transactions which are merely means only represented by book entries are prejudicial to the interest of the company or not? Merely book entries are prejudicial to the interest of company or not? These are the 6 items has to be inquired by the auditor with respect to 143.1. Now 143.2 I am not discussing directly, I am coming to 143.3. 143.3 is a lengthy section. You try to understand what I just tell. 143.3 is auditor's report shall also state that. That means it has to be compulsorily there in the report, that he has received all the information and explanations for the best of his knowledge is sufficient, was necessary for the purpose of audit, and the details thereof and the effect of such information was on the financial statements. First one is he has a duty to report that yes, I have received every information required for the purpose of audit. Yes, I am satisfied. First duty is that. Second duty is, as per his opinion, in his opinion, company has maintained proper books of accounts as required by company, as required by the law, which appears from his examination of those books and proper returns are adequate for purpose of audit evidence. And with respect to those things which is not visited by him, he has to check that whether proper summary returns are received from the branch or not. Then third one is, with respect to the audit report of the any branch office of the company, a person other than the company's auditor has been sent to him. Then you have to check it whether that report as per prepared as per the standards on auditing or not, the manner in which it dealt in that preparation of his report. Then whatever the balance sheet as well as P&L account are there, are they agreeing with the books of accounts or not? Because anything which is there in books of accounts has to be entered in the financial statements. You have to check. And all the financial statements are agreeing or complying with the accounting standards or not, because financial statements has to be prepared as per accounting standards. Those things has to be audited as per auditing standards. So as an auditor, you have to check whether it is being complied with accounting standards. Then you have to again check that are there any transactions in financial nature which might have any adverse effect on functioning of the company, like some money laundering transaction or maybe some black money transactions. Are there any transactions are present in the company, so that company might go into shutdown part if they try to any authorities find it out. Then as a auditor you have to even check, is there a director disqualified or not to be a director, or is still qualified to be a director. Then see, I suggest you try to remember some 5-6 points here. I obtained all the information, books of accounts are agreement with financial statements and P&L, then branch offices not visited by me, I just consider the reports of them, all those things has to be, and the directors which are disqualified or not as per 164(2), have to check. Then comes I point, it is important point, 143(3)(I), where they tell that mainly internal financial control related part comes. Internal financial control. Sir, what is internal financial control? See, there should be some controls for finance related part which are internal in nature. Outside party is not doing that. It is done by internal party. So in IFCs, they should be adequacy of IFCs are present or not, you have to check. Adequacy means depending on the size and nature of the company. Company size is very big, more IFCs are required. Company or this business is complex, more IFCs are required. Company business is less, company complexity is less, then lesser things are sufficient. But all these things IFCs, it can be asked as an 3 marks question, not applicable to a private company which is OPC, small company. Small company means you should not forget there are 2 conditions. Paid up capital is less than or equal to 10 CR, and I am talking from May 26 examination angle, and turnover is less than or equal to 100 crore rupees. Turnover is less than 100 crore rupees, less than or equal to 100 crore. If both the conditions are satisfied, then it is a small company. And you are a private company which is having a turnover of 50 crore or less, or not or, and aggregate borrowings either from bank or FI less than 25 crore rupees. Less than 25 crore rupees. In such case, these IFCs are not applicable for you. Again, you have to select some matters which are required to be disclosed. You have to check that whether company has disclosed all the pending litigations and its impact on the financial statements. That has to be discussed. Pending litigations, sir, we have 10 cases pending. If we lose the case, we have to pay some 100 crore rupees of penalty. Yes, disclose that the financial impact. And if the company sees any foreseeable losses which are material, whether the company made a provision or not, that also has to be checked by the company. And any amounts, for example, unpaid dividend for 7 years, unpaid interest on debentures or deposit something, after 7 years, actually that has to be transferred to IPF account. Is there any delay in transferring any funds to the IPF account? That also has to be reported by the auditor. Now, fourth one is consisting of 3 things, mainly 2 things only. If you remember in our regular class, we gave an example of A Limited is there. Now, it want to give money to C Limited. Money to C Limited. But Companies Act is prohibiting direct transfer of money, loan, sanction, guarantee, anything. That is why what A Limited does is, A Limited went to B Limited, told that, see, I will invest 10 crore rupees in your company, you invest 10 crore rupees in C Limited. If these round tripping transactions are happening, then they are telling that if these types of transactions are happening, then you have to report it as an auditor in the audit report, IFC report. Sir, what is that? Here in the first case, A Limited is there, right? That is first part. That means, have you given any money either directly or indirectly as a loan, guarantee, security, advances to some party, so that in turn they will send it to some other party? Then you have to check it. Then second one is your C Limited. That means, have you received either directly or indirectly from any other party, holding company, some other company, guarantee, loan, security, advances? You have to check. Then again, whether the dividend which is declared as per 123, that is paid or not. Sir, when it has to be paid? Within 30 days of declaration. Within 30 days of declaration, you have to pay that dividend. And this is important, 6th point. whenever the company is there, company should have something called as audit trail or edit log. What is audit trail or edit log? Whenever any transactions are being entered, for example, I tell that on 1126 there is a sales of 10 lakh rupees. They entered in the books of accounts 10 lakh rupees, sales register. But it is done by person A. Now on some 5th of January 26, person B is on leave. Knowing that situation, person B made it like sales return, or they put it as PDD, provision for doubtful debts, of 2 lakh rupees. So net remaining is 8 lakh rupees. Then that person gave that 8 lakh rupees to company directly. Remaining 2 lakh rupees they agreed between B and the client. See, I will reduce 2 lakh rupees, you give me 1 lakh rupees, you keep it 1 lakh rupees. Then later when I went to the audit, I saw that there was a sale of 10 lakh but collection was only 8 lakh. What is the reason? Then I saw there is a PDD of 2 lakh rupees. Then I went on checking, is it as per the law? Did they actually financial condition worse? Or is it just the disguise in the nature of that they just wanted to deduct the money and collect that in a personal nature? That has to be checked. So how do I check it? When there is an edit log. What is edit log? On 1126 A has made a sales of 10 lakh. So that is on recorded time, name and item. Then on B, on 5126 he made a PDD of 2 lakh. Then he will come to know, we will come to know as auditor that yes, sales was actually modified by person B. Let me ask him, not person A. So this track record of being, what is this, log? Log means a time duration, that is called as edit log or audit trail. And that should not be possible to tamper it. That should not be possible to tamper it. This is with respect to 143.3, report, duty to report. Then comes 143.12. First we will discuss 143.12 and then we will go to 143.11. What is 143.12? 143.12 says that, actually we will discuss that in even Companies Act also. Section 143 is there. As an auditor, whenever you are doing the audit, if you find any fraud is an intentional act which is committed by on the company or by the company, then auditor has to verify that. So it is mainly on the company, not by the company. If an fraud committed on the company, not by the company. That by the company we will discuss in clause 10 11 10 or 11 we will discuss that. I think 11 that is, not 10. They tell that where company committed the fraud or on the company fraud is committed. 11, that is 11. Stranger Things main character 11. So if you, while doing the audit, if you find out any fraud which is 1 crore rupees or more, then as an auditor, within 2 days of coming that fraud into your knowledge, you should immediately prepare a report and give it to the company. And within 45 days you seek the reply. Within 45 days you seek the reply. Sir, what reply? Whatever you have given as observation, how they have taken the actions, you seek the reply. Sir, when I say 45 days, it is not 2 plus 45, it is 2 plus 43 days. 2 plus 43. Once it is done, the moment you get the reply, along with your observations, reply and any suggestions or comments on the reply, you add everything and post all those things to the MCA, Ministry of Corporate Affairs, using the registered post. But you have to post it in a letterhead of yours and give the communication address, mail ID, mobile number, everything has to be given for those things. But instead of going for registered post, if they go for speed post, that is also allowed. That is also allowed, provided he sends a follow-up mail on to a MCA, Ministry of Corporate Affairs, Joint Directorate. Sir, I have sent a speed post with so and so number, please have a look into it. He has to send a mail if it is speed post. If it is registered post, AD, acknowledgement due, no need to do any of these things. This is 143.12 first part. Remaining thing the government will take care. No sir, fraud is not more than 1 crore, fraud is less than 1 crore. Then just within 2 days you report to the company, and whenever you are reporting you should report 3 things. What is the nature of fraud? Sir, they have taken money, pilfered, or inventory has been taken, bank loan has been taken, some type of fraud which is there, that you have to state in the nature of fraud. Then amount involved, how much money is actually involved in the fraud. Then parties involved, which parties has actually did that fraud. Please have a look into it. Then the company in its board report, whenever it is being conducted, that it has to give 4 things. 3 things which are given by auditor to the company, and 4th one is what action they have taken on those matters which is specified by auditor. That is 143.12. Pause the video and have a look into it once. The next one is, which is very important, where I expecting a 5 marks question, that is 143.11. So 143.11 says that central government has given a type of report which has to be reported by the auditor of the company along with the statutory auditor's report. Normal audit report to anyway he has to give, along with the normal audit report he has to even give the CARO report, company's report, company's auditors report order 2020-20. Earlier it is 2016, now it is 2020. Sir, what is there in this 143.11? Under 143.11 there are 4 paragraphs which are given. 4 paragraphs. First paragraph is tell that short title, commencement, all those things. Second paragraph is talking about the applicability of the CARO, for which companies it is applicable, for which companies it is not applicable. Third paragraph is talking about what are the matters which the auditor has to report it on the audit report. Then fourth matter, he has to tell that why did he give modified opinion or unmodified opinion which are there for items which are there in paragraph 3. Why did he modify those things? Reasons for favorable or unfavorable opinions. First one is, this report is called as CARO 2020-20, company's report audit, company's auditors report order. And applicability is, they tell that this applicability is important from examination point of view. This CARO is applicable to every company including a foreign company. Yes, it doesn't matter whether they are registered in India or outside India, but if they are present in India, it is compulsory applicable, except for few types of company. One is a banking company, second one is an insurance company. For them it is not applicable. Along with them, Section 8 company, OPC and small company. These are the 5 types of company: banking, insurance, Section 8 company, OPC and small company. Small company, again I am not repeating the definition, 10 and 100 crores paid up capital as well as turnover. Now it is even not applicable for a private limited company, other than a subsidiary or holding of a public company. That means you are not holding more than 50% in a public company, or not a public company is holding more than 50% in your company. You should be an independent private company. Then your paid up share capital should also be 1 crore rupees or less than or equal to 1 CR, and borrowing should not be more than 1 CR. That means less than or equal to 1 CR from any bank or any FI during any time of the financial year. Sir, I took the loan on the July month and returned it in the August month. I don't care, it is loan. It is already crossed 1 crore. and revenue turnover does not exceed 10 crore rupees as on the financial statement date. Three conditions, not three, I'll call it as four conditions. You are a private company other than a holding or subsidiary of public company. Turnover is not turnover, I will go by the list. Paid up capital, including the reserves, paid up capital and reserves, less than or not exceeding 1 crore rupees, and borrowings not more than 1 CR as on the, at any point of time. Then revenue is not exceeding 10 crore rupees on the balance sheet date, financial statements date. These are the four conditions which has to be satisfied. Sir, you are telling paid up capital and reserves is 1 crore, turnover is 10 crore. That means if the paid up capital is 2 crores and turnover is 20 crores, then it is applicable. But if you think from small company point of view, up to 10 crore rupees paid up capital, up to 100 crore rupees of turnover is given for them. So in simple terms, whenever there is a clash between small company and private company, then small company will prevail in those things. This is the applicability of company's auditor's report order, CARO 2020. When will it commence? It will commence from the date it is notified in the official public gazette, publication of in the official gazette. Then there are 21 clauses in which first 20 clauses are applicable for all the types of company. All the types of company, whether it is SFS, like other than those applicability, non-applicability provision. But clause number 21 is applicable only for consolidated financial statement companies. Whenever there is a holding company and that holding company is having, what is it? Holding company is being audited by an auditor, and those auditor is considering the reports already given by some branch auditors or other subsidiary company auditors. In clause number 21, he has to tell that from this company there is an adverse remark from an auditor, and all those details has to be given under clause 21 of the holding company, that is consolidated financial statements. That is not a separate opinion, it is just the compilation of all the CARO report reporting as per auditor in a single place. Please have a look into the applicability part. Once this revision happens, try reading at home entire thing which happens in this revision in detail. So we'll begin. Carrot 2020, 21 clauses. The first clause they're talking about tangible or intangible assets. See, there is a possibility of being asked a single point as a 5 marks question by way of a case study or a direct question. Generally case study only they ask, and whenever they ask you have to write a specific points which are given here. You can't add some other points or remove some other points. It has to be very, very specific which are given under these things. If they ask with respect to anything tangible and intangible asset, then you have to write these 5 points A, B, C, D, E which are given under this clause 1. Sir, what is this clause 1 talking about? Clause 1 is talking about PPE, that is tangible and intangible assets. As an auditor, first he has to report that whether the company is maintaining the proper records of property, plant and equipment as well as intangible assets or not. First means the records, physical records of the company has to be verified. Once he sees that there are some books of accounts correctly there, he has to cross verify that with the physical verification of the property, plant and equipment on a reasonable interval basis. The management has to do that. Whether management is doing that or not on a reasonable interval basis, he has to verify. First one, he should verify the fixed asset register, proper records. Second one, he has to check that company is making on a reasonable intervals physical verification of the things or not. 2 things. Then third one, if the company is having any immobile property, other than lease agreements or leases, then whether that is held in the name of company or not, you have to check it. Sir, it is not held in the name of company. Then it is held in the name of whom? What is the reason? What is the period they are held? You have to disclose those things. So what is the description of the property? Sir, there is a land and the value of the land is this, and it is held in the name of person A, and is a director, employee, relative, all those things. And what is the period they are holding, and what is the reason for not holding in the name of company? Third part of the clause 1. First clause, PP, fixed assets and intangible assets, they are talking about whether the company is maintaining the fixed asset register. Second part is whether the company is doing the physical verification of the assets on a reasonable interval basis. Third one, if the company is having any immobile property, whether those properties are held in the name of company or not. If not, you have to give the details as below. One is description of the nature of property, gross value, carrying value held in the name of whether he is a promoter, director, what is the period he is holding, 1 year, 2 year, and what is the reason for not holding in the name of company. That is the third one. Now fourth part of the fixed assets are intangible assets. They tell that PPE, whenever company does any revaluation of assets, like upward increase in the value of assets just for the purpose of adjusting the books, then and that revaluation caused more than 10% change in the existing book value of the assets. For example, earlier we had a asset of 1 lakh, now it is becoming 1,15,000, so now there is an increase in 15%, more than 10%, then that has to be properly dealt in the books of accounts. Fourth one. So revaluation is based on the valuation of registered valuer or a test, that has to be taken care. You can't do that valuation. And if the change is 10% or more, then what is the net carrying value of the property, that has to be given before and after. Then last one is, it is not applicable for many companies. If the company is involved in any benami transactions or not, that has to be checked. 5 elements you have to report as an auditor in case of PPE or fixed assets or intangible assets. Now second clause, they are talking about inventory. Under inventory, the auditor should check that whether management is making the physical verification of the inventory on a reasonable basis or not, and if there is any change in the value of the inventory, that is more than or equal to 10%, discrepancy, it can be higher also, it can be lower also, then that has to be properly dealt in the books of accounts. Then that is first part of the inventory. Then second part of the inventory is, if you are a company which has availed any working capital loan in excess of 5 crore rupees, then auditor has to check that whether company is filing quarterly statements, stock statements with the bank or not. See, here we are not doing anything, we are just checking whether the company is doing it properly or not. First, under clause 2 is that physical verification of inventory has to be done by the management on reasonable interval basis, and if there is any discrepancy of 10% or more, then that has to be dealt correctly in the, okay. One point which I missed out here is 10% or more in the aggregate for each class of inventory. Sir, what is this each class of inventory? Trade receivables is one class of inventory, stock is one class of inventory, again maybe current assets, cash and cash equivalents is, or maybe FD, ODs, any asset is one class of inventory. If in every individual class of inventory, for example inventory, okay, inventory does not just tell, show that it is what? The stock. Inventory may be trade receivables also, inventory may be the stock also. Under stock also again finished goods, again semi-finished goods, again raw materials, all those things. Individual capacity wise, if they are changed in more than 10% or more, you have to record it in books of accounts. The second one is, company has taken a working capital limit in excess of 5 crores. And if that is the case, then auditor has to check that whether company is filing quarterly statement, stock statement with the bank or not. That is clause 2. First one is fixed assets and intangible assets, second one is inventory. Third one is investments, you call it as LGSI. Loans, guarantees, securities and investments. Loans, guarantee, security and investment. See, this clause 3 is talking about company giving the loan, company giving the security, company giving the guarantee, company not taking, company is giving to third parties. It is the guarantor, it is the security provider. If that is the case, then whether during the year company has made any investments, provided any guarantee, security, granted any loans or advances in the nature of loans, secured or unsecured, to the companies, firms or LLP or any other parties, then auditor has to check that what is the amount of advances, what is amount of advances or loans, guarantee, security given, then in that you have to, auditor has to tell that what is the total aggregate amount given in the year and what is the balance outstanding on the balance sheet date. That means we gave 10 lakh rupees loan to some subsidiary and they repaid 2 lakh rupees, then remaining is 8 lakh rupees. You have to state 10 as well as 8. And this loan aggregate amount has to be given with respect to subsidiary, joint venture and associates, not for some independent companies, unrelated companies. So clause 3, investments, LGSI is talking about if the company has given any loan, guarantee, security, made investment, then company has to verify, auditor has to verify what is the aggregate amount which is given in the current year and what is the balance outstanding to the subsidiaries, to the joint venture, to the associates. We call it as related parties, RP. Sir, who is RP? You have to refer AS 18, related party, or even SA 550. You can go through that also. Then whatever we discussed in this point 1, the same point 1, but it is for other than related party, other than subsidiary, joint venture as well as associates. Have to check. Then if the company has given any guarantee, made investments or something, security has given, then company has to, auditor has to check that all those terms and conditions are not prejudicial to the company's interest. Not prejudicial to the company interest means they are not against the interest of the company. They are in interest of the company as well as members of the company. Then again, when there are loans given, while giving the loan, have you given any schedule of repayment? Schedule of repayment means monthly EMI, how much interest is how much, principal is how much, principal, payment of interest stipulated, and whether the receipts are regular or not, you have to verify. Then if there is any amount which is overdue for more than 90 days, then what steps the company has taken for the purpose of recovery of the principal as well as interest. Then this one is like, whenever there are some loans which are becoming due in the current year, if the company this company has given any extra loan, or did they extend the existing period, or did they renew the existing loans, extend it, renew it or given fresh loans for the purpose of clearing the old loans, then that also has to be given separately. And last one is whether the company has given any loans and advances which are in either payable on demand or without specifying any terms of period. That means like payable on demand or no time period only. Then you have to tell what is the amount you have given, what is the percentage of that amount to the total loans granted. Sir, I given total 100 crore rupees of loan, out of which 3 crore rupees is repayable on demand. That means you have to tell that 3 crore and 3% of the money is given on repayable on demand. That has to be specified. 6 points has to be given. First one is LGSI made to related parties. What is the opening balance? What is the current year closing balance? Then LGSI made to other than related parties. What is opening and what is closing? Then next point is, and LGSI made by the company, are there any terms and conditions not prejudicial to the company? You have to check it. Then third one he has to check is, whenever they give that loans, advances, everything, are they also giving that schedule of repayment, principal, interest, EMI, and are the receipts are regular or not? If that is not there, then what if there are any receipts which are overdue for more than 90 days? What action the company has taken? Fourth one. Then fifth one is the company given any loans, fresh loans, or extended the existing loan, or renewed the existing loan, so that they can clear the old dues? That has to be reported here. Then last one is, are there any loans which are given repayable on demand or without specifying any period? Then as a company, they have to specify amount of loan as well as percentage of the total loan, and I have to check that. That is third clause, very very important clause. So question can come from either of the three clauses. All the three clauses are important. Now the fourth clause says that whenever you are making that LGSI, loans guarantee investment security, you just comply with 185 and 186 of the Companies Act. Not so important, just remember the two words 185 and 186 of Companies Act, section 185, 186. Then fifth clause, whenever the company is accepting the public deposits, see, deposits are of two types. One is deposits from the members, which we discussed in section 73 to 76 in Companies Act. Again, there is a deposit from the public. Whenever company is accepting the deposits from the public, it has to follow three things. One, whether they have complied with section 73 to 76 of the Companies Act or not. Then it also has to comply the RBI guidelines. RBI guidelines has to be followed. And third one is, if any NCLT has given any order, that also has to be clearly followed. So first one is 73 to 76 of Companies Act. Second one is RBI guidelines or regulations, provisions. Then third one is NCLT orders. This is clause number 5 that has to be followed. Then clause number 6 is also again very important, which is connected to Companies Act. This is from Companies Act only, section 143, where they tell that if you are a company which are supposed to maintain the cost records. Sir, how I can know that I am required to maintain cost records? Depending on whether you are regulated or unregulated sector, which are specified under section 148. Then you have to compulsorily maintain cost records as per 148 of the Companies Act, section 148 of Company Act. That is clause number 6. Then 7th is again an important, where they tell that whatever the money which is required to be paid by the company to the statutory authorities, like the income tax, PF, stamp duty, sales tax, anything, then there are two types of duties. Dues. One is undisputed dues. What is undisputed due? I told sir my income is 10 lakh, I will pay 3 lakh rupees as tax. Government also told, okay, income tax department. That means there is no dispute between us. Now I am telling sir my income is 10 lakh, I will pay 3 lakh rupees as tax. They tell that no, your income is 20 lakh, pay 6 lakh rupees as tax. That means there is a dispute going on. So one is undisputed dues, second one is disputed dues. If it is undisputed dues, then everything is clear for you both people. Then if there is any undeposited, if there is any company is regular in depositing those statutory dues or not, which are undisputed. If not, what is the extent of arrears outstanding and from when? Consider that has become due date here. From the due date on the last day of the financial year, for a period exceeding 6 months. They are telling if not, the extent of the arrears outstanding dues as on the last day of the financial year concerned for a period for more than 6 months from the date they become payable shall be indicated. That means check what is the date which has it become due. Sir, my due is May 10th, 2025. That means it is on 25-26 period. Or we will take May 10th of 2024. That would be better. Or May 1. We will take May 1 only. May 1, 2024. Then due date is May 1. From there you count the 6 months. May, June, July, August, September, October. By October 31st it is over. Then you take 6 months ಆದ್ಮೇಲೆ ಅದು ಪೇಮೆಂಟ್ ಆಗಿಲ್ಲ, if that is not being paid, then you have to consider that has to be disclosed as non-payment of undisputed statutory dues. Sir, no sir, the due is on December 1st. When I say December 1st, what is the 6 months period? December, Jan, Feb, March, April, May. That means you are going into the next year. So don't report it as undisputed dues not deposited with the statutory dues in the current year. You just wait till completion of 6 months or financial year, whichever comes earlier. If that happens, then report in the current respective year. Then if there is any statutory disputed dues. What is disputed dues? Sir, I am telling 3 lakh as tax, he is telling 6 lakh as tax, then we went to the court. Now as an auditor, I have to check that 3 things has to be present here. What is the type of dispute which is there? Second one is where it is being disputed. Third one is how much amount for it is disputed. 3 things that has to be discussed. I think only 2 things are there. Nature of not being disputed on account of dispute. A forum as well as amount. Only 2 things are there. Okay. Not nature. Only forum as well as amount. What forum? Maybe NCLT, maybe High Court, maybe Supreme Court, District Court. Those things. That is clause 7. Undisputed statutory dues, undisputed statutory dues. Then comes clause 8. What is clause 8? Clause 8 they are talking about whenever there are some income which is earned by you but not disclosed earlier, not paid the tax, but either you surrendered it or some government authority conducted a raid and found that money, then we call it as undisclosed income. Now it is coming into picture. That is why disclosure of an undisclosed income. Then how are you dealing with that in the books of account? That has to be seen. Clause number 8. That's it. Then clause number 9 is also very important. 7 is important, 9 is important. 9 is repayment of loans and borrowings. It is not repayment of public deposits. It is repayment of loans and borrowings of the company. Now, whenever the company, you have to check that, is the company made any default in repayment of funds or loans? If yes, then you have to give details lender wise. Lender wise means, sir, I have taken loan from SBI, HDFC, ICAI. So SBI you give separately these details, HDFC you give separately this all the details, again ICAI gives all the details separately. Sir, what are those details has to be given? What is the nature of borrowing? Sir, I took term loan, I took working capital loan, something I took, that nature has to be given. What is the name of lender? State Bank of India, ICICI, HDFC. And what is the amount which are paid on due, not paid on due date? Sir, I am supposed to pay 10 lakh but I could not pay it. Then the 10 lakh rupees, is it a principal or interest? Sir, it is principal only. From how many days it is delayed? Number of days. Then if there are any remarks, you can put it. So yeah, everything has to be given on lender basis. Nature of borrowing, name of the lender, amount paid, amount not paid, principal or interest, number of days it is due. Then any remarks it has to be given. Then we have to even check that as an auditor, does this company even declared as a willful defaulter or what by any bank? For example, Vijay Mallya's company, personal companies like private companies, not personal, are declared as willful defaulters. Even though they have the money, they are not ready to repay it. So if any of that case, we have to verify that. Then third one is under clause number 9, third point is, are there any term loans which are taken for short term but actually they applied, sorry, that is short term, right? Okay, that is not short term and long term, that is next point. They are telling, are there any term loans which are taken but you did not use it for the purpose you took it. You have used it for some other purpose. For example, I took bank loan for buying the machinery, but actually I paid the salary out of the the money which is received by the term loan. No, that is wrong. If there is anything that has to be disclosed here on the CARO report. Then again, if you have raised any money for short term, then you should use only for short term. You should not use it for long term. If there is any of those things, you have to again inquire that short term and long term. Then next 3 points are, you have to verify that whether company has taken any funds or loan something for the purpose of meeting the financial needs of the subsidiary company, associate company or joint venture company. ಬೇರೆ ಯಾವುದೋ ಕಂಪನಿಗೆ ಬೇಕಾಗಿದೆ ಅಂತೇಳಿ ನಾನು ಯಾವಾಗಾದ್ರೂ ಲೋನ್ ತೊಗೊಂಡಿದ್ದೇನಾ ಅದನ್ನು ಕೇಳಬೇಕು. ದಟ್ ಆಲ್ಸೋ ಹ್ಯಾಸ್ ಟು ಬಿ ಆಸ್ಕ್ಡ್. Then whether company has raised any loans during the year by pledging their subsidiary securities. See, when will some company become my subsidiary? When I am holding more than 50% of share capital in that. I am giving that 50% to the bank, pledging it, and I am taking a loan. Are you raising that? Yes, report under point F. Then if there is any repayment in payment of such default or debt, that also has to be indicated here under point number G. This is clause number 9. Clause 9 is telling that repayment of loans and advances. When there is a default, then company has to give the lender wise details. Details has to be given in lender wise, that is nature of the borrowing, name of the lender, amount outstanding, whether it is principal or interest, and what is the number of days it is in outstanding, and remarks. Then is this company declared as any willful defaulter? Then have you applied any loan taken for some purpose but applied for some other purpose? Have you taken short term, have you raised any short term funds and used for long term funds? Then have you taken any loan from any bank or FI, financial institutions, for the purpose of meeting subsidiary, associate or JV needs? Or have you pledged your any of securities of the subsidiary company, associate or joint venture for the purpose of obtaining any loan? Or have you defaulted in repayment of any loans or which interest which are raised? These are the points which has to be reported in CARO as per auditor. Then 10th one, they are telling fundraising part. Sir, what is this fundraising? Whenever the company is there, company can raise funds mainly from 5 activities. Either it can go for IPO, or it can go for FPO, or it can go for preferential allotment or private placement, or conversion of convertible debentures or preference share. These are the 5 cases. If any of these things are happening, then how are you dealing with in the books of account? That is what they are telling. Whether the compliance are correctly carried out or not, you please have a look into it. Fundraising. It simply tells that if you raise money for some purpose, use it for the same purpose. Don't divert it. Sir, how can I raise money? 5 ways. IPO, FPO, preferential allotment, private placement, and conversion of debt and securities. Then 11th one, if you look at, if you remember 143.12, we told if there is any fraud committed on the company by any employees, officers or anybody which is less than 1 CR or more than 1 CR, that's okay. But committed on the company, that has to be reported as per 143.12. But here they are telling which is committed by the company or on the company, doesn't matter. Both the things has to be reported here. Company did fraud with the employee or employee did fraud with company. Both are covered here. Then you have to report it, notify it under clause 11. Again you have to even report under follow 143.12 also, that more than 1 CR central government, less than 1 CR other than central government. Then file even ADT 4 also. Then as an auditor, have you considered the whistleblower complaints or not? Those whistleblower complaints have you considered or not considered? 11th clause. Then comes Nidhi company. This is also important, where they tell that if you are a Nidhi company, then you have to meet mainly 3 criteria. You have to maintain net owned funds to the deposits, 1:20 ratio. That means if you are accepting deposits of 20, you should keep net owned funds of 1 rupee, 1:20 ratio. You want to accept 40 rupees of deposits, keep 2 rupees of net owned funds. You want to accept 1000, then 1:20 means keep how much? 200. Sorry, 1:20 means 50 rupees. Allah. Either like this, 50 rupees. 50 rupees as your net owned funds. 50, 20 is 1000 only. So net owned funds, 2 deposits criteria is 1:20. Deposit 1 ರೂಪಾಯಿ ಇರಬೇಕು, net owned funds 20 ರೂಪಾಯಿ accept ಮಾಡಬಹುದು. Then you have to maintain what out of the total deposits which have accepted, totally 10% of unencumbered deposits. You can't pledge that money, you can't give that money as a loan, you can't use it for any purposes. You have to keep it as a free money. That is very, very free. Not free from every charge, free from everything. You want it, just you would be able to get it. That is how free it has to be. Unencumbered deposits is 10% of term deposits mainly, not saving deposit, not current account deposit, something else. It is term deposits. Then, is there any default in repayment of loans or not? That also has to be checked. Not loans, deposits. Payment of interest on deposits or repayment of those things within the period. If you are a Nidhi company, as an auditor, you have to check three things. First check, is that company maintaining 1:20 net owned funds to deposit ratio? 10% of term deposits are kept as unencumbered deposits, and is there any default in repayment of interest on deposits? It has to be checked. Then 13th, they tell that related party transactions. If the company is doing any related party transactions, they have to comply with 177 as well as 188 of the Companies Act. That's it, nothing else. Then 14 also tells that every company should have internal audit system, mainly section 138 compliance company, where they give internal audit requirement for some companies, paid up capital, deposits, borrowings and turnover 25, 50, 100 and 200 crore rupees of criteria. Then they have to maintain an internal audit, and internal audit system should be in such a way that it is depending or suitable for the company's size. Company is big, maintain big internal audit team. If it is less, then you can go for less, depending on the size and nature of the business. Then 15th one is non-cash transaction. You are going to give some car, you are going to give some house for a director, something like that. Then you have to check that 192 section is being complied or not. That is very, very important here. These are the 15 clauses. Before getting into 16 and continuation, we will just have a look into at least the names. Clause 1 is PP, that is fixed assets and intangible assets. Then clause 2 is inventory. Then LGSI. Then compliance of 185, 186 with respect to LGSI. Clause number 4. Public deposits is 5. Then cost records is 6. Then statutory dues is 7. 8 is disclosure of undisclosed income. 9 is repayment of loans. 10th is end use of funds, utilization of funds. 11th is fraud. 12th is Nidhi company. 3rd is related party. 13th is related party. 14th is internal audit system. 15th is non-cash transactions with the directors or any other person concerned to him. Now clause number 16, they tells that mainly for NBFCs. If you are an NBFC or housing finance company, housing finance activities company, then you should register yourself under section 45 IA of RBI Act 1934. And if yes, as an auditor I have to check whether you are having a valid certificate of registration or not. Valid certificate of registration. Yes sir, I have a valid certificate of registration. That's okay, no problem. Then there are two important points are there. One is, are there any company, whether the company is a core investment company as defined in regulations made by RBI. Sir, what is core investment company? If any company is being investing more than 90% of its entire fund into one group of company like Tata Sons, Tata Steel, Tata Motor, Tata Salt, Tata Tanishq, Titan, everything, then we call it as core investment company. There are some other provisions also for CIC. I am not talking about that. You are a CIC or not, you have to check. Then second one is, fourth point is, whether your group is more than one CIC as part of your group or not. That means, under point number C, you have invested more than 90% in other company. Point number D, more than 90% of other companies or other NBFC's parts are invested in your group. Your recipient under point D, your giver in point number C. And if there is any more than one CIC, that also has to be disclosed under point number D. Then 17 is cash loss. If the company has incurred any cash losses, then you have to consider that in any previous year. Then 18, it is about, what is 18? Material uncertainty related to the going concern, right? Sorry, resignation of auditor. whenever there is a resignation of an auditor, the incoming auditor should consider whatever the observations given or objections given by an outgoing auditor before accepting an engagement, the resignation of statutory auditor. Then 19 is material uncertainty. Whenever you feel that there is a material uncertainty or not, or you want to find it out, then go for something like some ratios, aging schedules, financial ratios, expected dates, trend analysis, all those things, so that you can come to a conclusion that no material uncertainty exists as on the date of audit report. Generally we discuss this in again 570 also. Then 20 as well as 21. 20 is talking about unspent amount of CSR. What is unspent amount of CSR? As per section 135 of the Companies Act, we know that any company which earns any profit that has to spend 2% of the 3 years average annual profit for the society, that is called as CSR, preceding 3 years. While they are calculating the 3 years, there are plus minus, all those things are there, I am not discussing. They found out, consider 2 crore rupees of amount has to be spent in the current year as a CSR, but actually they spent 1 crore only. Now there is unspent amount of CSR. Now we have to analyze whatever the unspent is there, is it related to a project which is ongoing or a project which is already completed? Sir, what is ongoing? I wanted to construct a hospital for one city, one village, I have adopted it. But the hospital construction takes 2 years. Because of which in the current year still 1 crore rupees I am having. 1 crore rupees I have to spend it in the next year. That is why we call it as unspent amount of CSR related to an ongoing project. Other than ongoing project means I thought 2 crores are required for construction of hospital. I completed the hospital within 9 months. But I spent only 1.5 crore. Remaining 50 lakh rupees still unspent. That is regarding other than ongoing project, because ongoing project is already completed. Now if it is ongoing project, within 6 months from the end of financial year, you open a separate special account in a bank, nationalized bank, then you put that money under that, and whenever you are constructing the school, hospital, something, take the money, construct it, it's over. Then unspent amount of CSR which is other than ongoing project. That means project is also not there, nothing there, then immediately transfer it to the IEPF account which is maintained by central government. Sorry, I think I told it in the other manner, period wise. If it is other than ongoing project, you should transfer it to Schedule 7 IEPF account within 6 months. If it is ongoing project, you open a separate special account and you transfer that money with respect to those things for special account. Then 21 is like, see, whatever we discussed clause number 1 to clause number 20, all those things are applicable only for SFS, standalone financial statements. All those things are not applicable for CFS, consolidated financial statements. But there is only one clause which is applicable for CFS is 21. Sir, what does this 21 says? 21 is not a separate clause. Whenever I am preparing a CFS, I have to add the financial information, balance sheet, P&L, cash flows, SOCI and notes to accounts of all the companies put together and prepare my CFS. And when I say A company, B company, C company is already audited, their auditor has already given audit report along with Caro report. A company auditor told that yes, public deposits with respect to that 73 to 76 not followed. Then the B company auditor tells that unspent amount of CSR not transferred to a EPF account. Then C company auditor tells that there is a repayment default in repayment of loans and advances. That means there are some qualifications under SFS audit report of Caro. Now when you are preparing your CFS as an auditor of CFS, you should prepare clause number 21 just stating that under company A there is a qualification given by the auditor in clause number 5. Under clause company B there is a qualifications on clause number 20. Again here clause number 9. You have to state this thing, that's it. Clause number 9, repayment of deposits, borrowings, default in repayment of borrowings, again unspent amount of CSR, public deposits, you have to just state it. So this 21 is applicable only for CFS, not for SFS. And when it comes to para 4, whenever you tell that sorry it is not transferred or you qualified opinion, you have to qualify this clause, then you have to tell that what is the reason why did you qualify that under paragraph 3. This is what the Caro report. So we done with 701, 706, 143.1, 143.3, 143.3i mainly, and 143.12 and 143.11 and Caro report. All the 4 paragraphs. So this is important, whatever we discussed today. It is generally going to be asked in the examination for at least 5-6 marks in the examination. Today's topic itself. Sometimes may go for 8 also. One question from 701 or 706 and one question from Caro report. So keep studying. So remaining things will continue. So if you have any doubts, you can ask me now. I will give 2 minutes then. ಏನಾಯ್ತು ಹೇಳಿ? You want 570 also? We'll do it. हाँ. If you have any doubts, do come with the doubts. We can discuss in the continuing class.